So I got a question here that says, I'm very confused. I keep on seeing different job titles. Loan originator, loan officer, mortgage broker. What's the difference? So a loan originator is just a general, that's like technically the correct term for anybody who is taking an application and originating, basically starting off a loan. So a mortgage broker, a loan officer, um, a mortgage associate. There's everybody kind of brands a little bit differently. Mortgage advisor. Those would be all loan originators. So those are the people who are licensed, who are taking your loan application, um, and setting up your loan file, basically. So that's like the technical term from the government that they say it's a loan originator license. A loan officer is typically an employee of a mortgage broker or a direct lender or a bank. Um, that's essentially just a loan originator. A mortgage broker is a very specific term. That's me. I'm a mortgage broker, and it refers to not just me personally, but my company. Essentially, we are an organization that arranges mortgage financing by bringing investors, so like essentially lenders and customers together. We don't actually loan any funds personally. We're not mortgage lenders. We're not the ones who are making the loan. We are essentially just same as any kind of broker. A freight broker. You know, right? Like a freight broker is not actually hauling goods on a train or on a truck, right? They're just bringing the people who are hauling the goods together with the customers. Um, so that's like a very specific type of mortgage lending where we have wholesale mortgage lenders or investors, and we have customers. We bring the two of those together. That's different than a retail mortgage lender or a loan officer who works for a retail mortgage company, that's going direct to the consumer. And what it does is it cuts down on some of that red tape, on some of their overhead. So what they're able to do is they have a much thinner margin when they're lending on a wholesale side of things. Um, all the money that they would have spent on paying, overhead for salaries, for staff, for office buildings, locations. It lets them kind of operate at scale where they've got basically 100 of me, 100 different organizations like mine that are all sending them business, so they can kind of consolidate their operations at scale without having to worry about having, a location in Florida, a location in Atlanta and Philly, Pennsylvania, all over the place, right? So they can consolidate and do a high volume of business at a lower margin, where we are taking on more of the actual legwork of processing these loans and dealing with the customers. So what that typically nets out to in most cases is we as a small organization are able to work more efficiently than this massive lender who's going to have different locations, and all of this additional overhead. We're able to operate a lot more efficiently. So some of that savings from that overhead cost that the lender is not paying is passed on to you as a customer, and the rest of that savings is passed on to us in the form of commission. So it's kind of a win-win for everybody. Essentially, is you get to have from a customer standpoint, working with a mortgage broker is, and this is, forget about the fact that like we have access to, instead of just dealing with one bank, right? We have access to 45 of them, based on your individual needs. That's another big advantage. But just from like a pricing perspective, you get a little bit more of a hands-on service. You get to work with like a smaller organization where you're actually, you're not getting lost in the sauce, I guess, with, kind of like the underlings of a big bank, and you're dealing with more of the people who are hands-on, running things. And because we're able to operate more efficiently as a smaller organization, some of that money is passed on to you in the form of lower fees, lower rates, lender credits, that type of thing. So it's really a win-win. I came from the banking world where I was a regional manager for a much larger organization. Before that, I was a loan officer for a much larger organization before I got into managing offices. And I saw the writing on the wall, towards the end of that moment, that time in my career. I saw kind of what these mortgage brokers were doing, and there's a very specific reason that I structured my business in this way as a mortgage broker, as opposed to continuing along that path, working for direct lenders. And it's because we're able to show tremendous benefit to the customers, without 16 16 other people with their hands in the cookie jar. So it's a win-win for everybody, basically, where we're making more money as an organization than we would, because we're not paying 15 different managers and owners of these organizations. And then our customers are getting better deals as well too. So just between the two of those things, it drives a lot of business, and we're able to execute a lot quicker because we set our own policies and procedures for how these deals are processed. So we're not in such a rigid framework of what a 1,500 person org would do. You know what I mean? We can streamline things a lot better. Being that we have less than 15 employees, it's just a lot smoother of a process with um, a lot less red tape. So that's the difference, and that's why we're set up the way we're set up.